Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So we have seen massive recovery on the chart of gold on Friday. We can see that there was a huge recovery from the level of 1617, 1618 till 1657. My god, just look at the size of these candles. Before I proceed, my dear friends, I would like to mention that yes, the world's most affordable forex trading workshop that I conduct, after 2 or 3 months is back again. I'll be conducting the workshop again in the month of October. You can see the dates here, 29th and 28th and 29th of October. If you really want to learn about trading, you can check out the link in the description, because after the workshop you will also receive 1 month of free support. I think that if you really want to take up trading as a serious source of income, this can be a very good option. And this is the main reason I have been doing this for some time. Now let's have a look at the chart of gold. First of all, I would like to take you to the weekly chart. The weekly chart, we can see that overall, when market broke the support also, the 200 moving, and overall the market did not break it. Market still tried its best. If I remove the drawings here, you can see market still tried its best to respect the support, and we can see that market is still not surrendering. So as a result, in the weekly chart, there is a possibility that there can be some upside. I am not talking about trend reversal, because if you look at a weekly chart here, we can see that market is constantly forming lower highs, and market forming lower lows. It means whenever market is going up, market is unable to cross the previous high. So if we follow this pattern, but still there is a possibility that market may try to recover sometime. We are not talking about trend reversal here, but we are talking about simple temporary recovery on the chart of gold. And again, if we go to the daily chart right now, you can see on the daily chart, we can see market forming a double bottom kind of a pattern. After this huge downtrend, we can see a double bottom. There was double bottom kind of a pattern here also, but after that there was a huge fall in the market, and we can see a similar story. We can see a similar story again. So one thing is very much clear, that at least we will try to see, at least we will get to see some green candles for the next couple of days. If we just try to follow this pattern also, we can see whenever market try to form a double bottom kind of a pattern, market has shown some kind of recovery. Overall, yes, the global experts are still thinking that market, the goal will be heading towards 1600, 1580 level, but we as a retail traders, usually we do not target 1000 pips, 2000 pips, 5000 pips. We are retail traders, and most of us prefer to open and close a position during the day only. We usually target how much? 50, 60, 70 pips, isn't it? We target for a single candle. So if you are a day trader, my dear friend, if you are a day trader, then yes, I am just saying that there is a possibility that market will be showing some recovery, recovery for the next couple of days, next week. But if you're a positional trader, swing trader, then yes, watch the market, observe the market on Monday, and then you can proceed. Now let's look at the important levels for Monday. So you can see that I have got many lines here on the chart. So let's try to understand these lines one by one. First of all, one thing is very much clear, that if market goes up, or if market shows good signs of recovery, then this resistance will be very, very important for the market. The resistance of 1722 to 1726, or you can also consider as 1730. This will be a very important resistance for the market. Because you can see the market has shown strong price rejection previously. And if I also draw the Fibonacci retracement here on the daily chart, we can see that Fibonacci is also showing 23.6% retracement here. Okay, and how do we get the confirmation that this is a valid resistance? Because previously when market tried to bounce from here, Fibonacci 23.6% was present and it did not allow the market to go up. So it clearly gives us the confidence that sellers are present in this level. Okay, so 1720, 1725 to 1730, this is a whole resistance zone in the market, and I think that this will be the most important resistance zone for the chart of gold for the next couple of days and weeks. Okay, but before that, 1720 is quite far away, isn't it? 1720 is quite far away. So before that, okay, before that, we may see some resistance around 1680 to 85 level. Okay, we can see some sort of resistance around 1680 to 85 level. Why we're considering this? Because you can see this time, okay, this time we do not have Fibonacci. Okay, we do not have that strong signal of Fibonacci here. But what do we have here? Okay, previous support. We have got some previous support around this level. So yes, there is a possibility that if market goes up and if there is not crazy up move like Friday, okay, under normal circumstances, market may reverse from 1680 to 85. So you need to mark 1720 25, sorry, 1720 to 22 25, that particular range, and then you need to also mark 1680 to 85. These two are the important resistances for the market as of now. Okay, it looks like that these resistances are important. Now we are back to our beloved 4 hours time frame. Okay, in the 4 hours time frame, you can see that apart from these two levels here, okay, okay, I have drawn a black line here. The black line is 1672 to 1675. Okay, this is also a resistance for the market. Let me tell you why. Because we are in the 4 hours time frame, and if we draw the Fibonacci retracement here, we can see that we have got 50% Fibonacci retracement around this level. Okay, you can see on Friday market did not respect the Fibonacci 23.6, but Fibonacci 50% retracement level, 61 point retracement level has got some importance. Okay, so as a result, if market goes up like this, listen to me carefully, if market goes up like this, okay, then I think that around 1673 to 74, market may show some kind of correction again. Okay, if you get some kind of correction, at least you can expect a profit of 30-40 pips again. So if market reverses, or if market shows signs of rejection, signs of price rejection from above around 1673-75, you can consider a sell position. Okay, you can consider a sell position around 1673 to 75 level. Okay, so keep in mind, no level is permanent in the market, no resistance is permanent in the market, no support is also permanent in the market. So as a trader, you need to observe the market and then you need to take the decision. After we are traders and we need to protect our hard-earned money, we need to protect our capital. Capital protection should be your first priority always. And if you're wondering why there was a huge recovery on the chart of gold, then you need to look at the chart of DXY. Yes, at last, at the end of the video, I am in the chart of DXY. We talk always about DXY, so I thought that in this video, okay, I'll be talking about DXY at the last of the video. Okay, so in this video, okay, you can, so not in this video, in this chart, you can see that yes, we had the symmetrical triangle pattern, but yesterday when market was trying to go up, there was a sharp fall on the chart of DXY, US dollar currency index. And if you are a forex trader, then if you track USD JPY, then you know it very well that there was a huge fall on the chart of USD JPY as well. So the main reason, okay, the main reason is that actually still there is no clarification, but Bank of Japan, the Bank of Japan has sold US dollars. Okay, the Bank of Japan has sold US dollars. Okay, so there is a massive weakness on the currency of yen for the last couple of months. So as a result, Bank of Japan has sold US dollars just to save their currency. Okay, so there was a fall on the chart of DXY. Okay, but still DXY has not shown any trend reversal signs yet. This is just a part of the correction. Okay, if DXY breaks 111 level, okay, then we can think that okay, there may be some trend reversal on the chart of DXY. But as long as DXY is maintaining its position above the 200 moving average, the red line, okay, it will be just a correction for us. There was a huge fall yesterday, no doubt, but it is just a part of the correction. Okay, so for a trend reversal, we need a inverted V pattern, which we don't have yet. Okay, I think that on Monday after the market opening, okay, the DXY will try to recover, because still we do not have any official statement from the Bank of Japan yet. Okay, so people are just there's a theory going on that the Bank of Japan has sold US dollars. Okay, anyways, okay, there was some heavy correction on the chart of DXY. There will be some recovery. Okay, there should be some recovery on Monday. Let's wait and watch. But for the chart of gold, again, okay, keep in mind right now we don't have any proper support. The best support is around 16. The best support is around 1618. 1620 level. Okay, the best support is around 1680 to 1620 level. In case the market goes down on Monday, you can hope that 1640, you can hope that 1640 may act as the support. But keep in mind, no surety, we do not have any surety, any confirmation regarding the support of 1640. Why we are still considering 1640? Because previously this level acted as support, but this is not a good support, no confirmation yet. So if market comes down after the market opening, then observe the market on 1640. If you see market forming hammer kind of a pattern or going up, then only take a buy position. In this chart right now the only support is around 1618 to 1620. No level is permanent in the market, so please be careful while taking any buy or sell level. Observe the market first, then only take the decision. This is my analysis. I can be wrong as well, so please do not gamble with your hard-earned money. Do not take blind positions. Bye bye, take care.